Thank you very much for joining us to this series. We'll be talking about so many things around finances, and today we'll be talking about the new unique face of lending, specifically how one of the lenders here in Kampala in Uganda, how Jonaki Holdings is partnering with Jonaki Foundation to impact lives. And joining me is, of course, the CEO himself, Jonan Kandwana. Good to have you on this series.
Thank you, Canary. Glad to be here.
Can you tell us about Jonaki Holdings and then Jonaki Foundation?
So Jonaki Holdings Limited is a financial institution. It's a money lending company, and we've been running since 2011, existing right here in Uganda with 2 branches and a branch in Lusaka in Zambia. So basically we lend money, but in addition to lending money, we have several other things that we actually do and invest in real estate and other things. But majorly our cream de la cream of the business, we actually lend money. Yeah, we coexist with Jonaki Foundation as well, which is a foundation birthed from Jonaki Holdings, meaning that it is for now 100% funded by Jonaki Holdings, with profits from Jonaki Holdings.
I see. So some of the profits you get from the money lending business, they go to the foundation. What does the foundation focus on?
The foundation majorly focuses on sphere of education. Because as an individual, even the time I'd not started Jonaki Holdings Limited, I had some families that supporting the children, sponsoring the children. So time came when the students I was sponsoring as a person became quite overwhelming. As simple as, so you are the farm and the farm manager says, you know what, I'm stuck with my child. He has no school fees. And you feel touched.
And these were really finances out of your own pocket?
Absolutely. From my salary, from my pockets, from a few things I was running, they're like, I'm going to take him on. But time came when the expense was really becoming a bit high. So I thought, business is a living entity. I'm like, if it's making money, can it also support on the other hand? And that's how Jonaki Foundation is birthed. Our major sphere that we focus on is education.
How does Jonaki Holdings' approach to lending differ from these other traditional lending institutions?
Jonaki Holdings differs because we look beyond the giving of money. Canary, it is different when a client comes and you actually find that the client has what it takes, but the money you're going to give them is not going to empower them, but rather, probably take them back 3 times. I'll give you an example of one of the Mzee who came. This Mzee was almost 70 years. This Mzee wanted money, not for a business investment or something like that. He wanted money probably to spend because, he wanted to spend money. He had a vehicle which was worth about 120 million. And he wanted only 30 million. Ideally, he would qualify. We look at his bank statements, his incomes were not as frequent. So we sit him down, you're like, you know what, Mzee, we cannot actually give you this money. First of all, it's not for investment. Secondly, you're going to lose your car because ultimately, given your statement, you're going to fail to pay. So we advise them, say, you know what, actually we are unable to give you the money because you won't be able to pay. And before you know it, you're going to lose your car.
So for you, it wasn't about just giving out the money or making profit from it, but also making sure that...
Make sure that he has the ability to pay, but also is going to invest in something tangible. Because if you ask someone what are you going to do with the money, and they start then there's a problem.
Right. How do you ensure that your lending practices, like what you just stated in that story, remain ethical and also accessible, especially to the undeserved communities?
What I've always told my staff, and even myself, we usually share on Monday and Wednesdays trainings for 2 hours. What I usually tell my staff is that look beyond the transaction you're doing with this client. So our major thing is to empower as much as we can, because it's not about money. We've seen clients, Canary, that have come with for loans of as low as 5 million. But along the way, because they have grown, they start actually accessing loans for as high as 100 million. You literally walked with them the journey. So our point is empowerment, not just lending for the sake of lending. And that makes Jonaki very unique. That's why you can have the confidence to say that, you know what, you want this money, you actually qualify for like 100 million or 70 million with the collateral and the financials. But I think given the stage at which your business is at, we think you can actually qualify for 50 million. First try that with the 50 million and see how it performs, then you can scale up your amount. So you can imagine any other lender would be hurrying to pump the money to this client as much as he can. because ultimately you've qualified that the person has the ability. Currently, I've had some people come to me like, you know what, Jonan, I have this business idea. I've been thinking about it for like 2 years. Can you give me funding to start up the business? With everything, he has a collateral and everything. But you look at this person, they have never done this business, it's going to be tricky. And ultimately, they're going to lose their collateral. So what you advise, you're like, you know what? You've never done this business. First, dive in with your money, see how it performs, then you can actually come for a loan. Because you cannot ideally start a business on your loan. Right. It becomes tricky.
Even when you believe that the business is going to make...
Even when you believing and the actual practical thing is two different things.
Yeah.
They are really different.
So you also have this other arm of course, Jonaki Foundation. How do you balance profitability and social responsibility in this mode of lending you're doing? So
at Jonaki Holdings Limited, for every profit that we get per month, we compute and we have a formula called profit first. So profit first is that for every profit that we make, it is apportioned in different portions. For example, if I may, a few areas that we divided, and my managers are aware, so it's clear cut. So 10% goes to tithe, 50%, 60% goes to investment, because the business has to grow. So part of the money is the profit that you make, you have to invest in the business so that it can actually grow. So 10% goes to real estate, 5% goes to charity. And charity is what informs the Jonaki Foundation. Now, if you're turning over, just an example, if you're turning over like 200 million as net profit a month, 5% of that amount can actually cater for as much. So you can imagine if you're turning over $1 billion, then it's a different story. So basically, we pick 5% of the profit with the guidance of that profit first, which I read from the book Profit First, to actually feed Jonaki Foundation. I must say that I've had a few interests of people who want to partner with Jonaki Foundation. Yes, and that's what I was going to ask actually. Have you formed partnerships with other organizations to strengthen the impact? I have, but we've not partnered as yet. Why? Because as Jonaki Holdings and Jonaki Foundation, we have values that we stand on. Now, in the event that the partner comes and probably wants to have a directive mandate and not necessarily partnering for the sake of supporting the cause at hand, and the person probably has divergent values, I'm hesitant to commit. Why? Because before you know it, the values that you're standing for, just because someone probably has committed $500,000 is going to say, you know what, let's fund this initiative, of which that initiative you do not associate with it. Because as we said in our conversation, our sphere is education. So if someone comes and probably because they are donating or probably partnering with you, and they start telling you to go to particular spheres which you're hesitant to commit to, then the partnership doesn't work out. But yes, we are open for partnerships, but we are very, very critical before we can actually consider any partnership. So the partnerships should speak to your values, yes, and core values, yes. How do you assess the success of the loans you provide in terms of both financial returns, but also the social outcomes? How we assess the success of the loans that we give out is that we get feedback. We have a system that gets feedback when you apply for a loan, when it is processing, when you get the loan, and how it is performing as you're using it. So in that feedback, clients tell you, this is how far you've gone. As a matter of fact, we've had testimonials of, you know what, Jonan, of all the loans that I've got from other lenders, I don't know about your money, but the deal I was going to invest in has actually sprouted out. I have never had these results before. Such testimonies. So they give us confidence that, you know what, if there's any progress on the side of the client, then we can actually get to register it. Some of them have actually testified. They come and we do a recording like, this is my poultry business that I funded. It has moved from probably 100 birds, it's now 1,000 birds. So such testimonials come through because of the feedback mechanism that we have at hand. But also, if you realize that someone has actually been getting a loan of 10 million, and they pay very well, and they come back and take a loan of 50 million, that will tell you that, you know what, this person's business has actually grown. So you're having an impact. So for us as Jonaki Holdings, it is beyond lending. It is funding the future. So you're funding the future of entrepreneurs, we're funding the future of business leaders, as it's about funding the future. And you have to tread very carefully. Because in funding the future, if you don't assess very well, you might end up curtailing the progress of someone, which is not speaking to funding of the future. So in this mode of funding the future, what are the most common challenges that you face? The most common challenges that we usually face is that some clients come for money. They have good business ideas or businesses that are already running. And you actually sit on table and agree, we're going to fund A, B, C, D, F, G with this amount, because we tend to pick interest in people's businesses because we have that edge of going beyond lending. But again, someone accesses the money and all of a sudden he moves by a bond. He looks at a very, very nice vehicle that he has always dreamt about. And before you know it, a portion of the money is committed to buying the vehicle, which was not in plan. And when we dig deep, the person who has been performing very well for the first loan, second loan, third loan, fourth loan, why is this person not performing well? On asking, interrogating deep, the person used part of the money to buy a vehicle. Or probably to take a trip, a luxury trip in Dubai or Zanzibar, and you get shocked. So ultimately, the person struggles to pay because he or she did not commit the money for which he borrowed it for.
Right. Lastly, looking ahead, how do you see the future of lending in Uganda?
Future of lending in Uganda? Basically, I think the future of lending in Uganda is that there's always demand for money. Only that as time moves, things are shifting. The future is going to shift to online lending because people want to access money at the comfort of their seats, of their offices, not the physical of walking to the office. Technology has changed, has evolved. But also, too, is that it's going to be very hard for informal lenders. Why? Because as we move forward, lots of options are prevailing. There are many companies that have come up, that are already running, that are giving cheap money. They are technologically savvy. You can access money very easily. And they actually are after your growth. So in the event that you are an informal lender, you do not belong to an association, you are not formalized, it might be very hard for such a person. So in a few points, the future is technology is going to advance a lot. People are going to access money very easily, but also people are going to miss out on getting money. Because then I can access you from the comfort of my office. Run your CRB like we do, like seamlessly on my computer. Then I'll see your credit rating. So I can say, this one we can fund, this one we cannot fund. But also, too, is that if it's a business entity or even a lender, you actually have to be formalized. Or else, people are getting, the borrowers or the clients have a lot of options at hand. As a drive for the association, we want to reach a moment where someone can actually look at the catalog and say, Jonaki is lending at probably 2.8%, and this other lender is lending at 5% and 10%. But people have their preferences. There's a reason as to why someone could go to someone of 5%. Probably they have their unique selling proposition that speaks to them. But ultimately, the unformalized or the informal lenders, it's going to be tricky for them because it's going to get a lot of formal, and formal. But also, finally, is that people always demand for money, especially if the commercial banks do not have a taste for the public. Because there are few commercial banks actually that are willing to lend to the public, even business people. They have options of buying government bonds. They have options of even accessing cheap money from the central bank. They have no appetite whatsoever. You have seen some banks have actually gone real estate because they have idle money. And they are hesitant to lend to the community because it's not banked, but also it's a risky population. So I must say that the lenders, especially the formalized one, the future looks very bright.
All right, stay tuned to this YouTube channel, and thank you very much, Jonan. Jonan Kanano is also the president of the Money Lenders Association of Uganda.
Thank you, Kanori.